Wasabi Wallet. Unfairly private.
What's going on, everybody? Happy Thursday. Welcome to the show. Lots to talk about this week. Lots going on. We had an epic dump, the likes of which we've not seen since, I'd say, March last year, when everybody was freaking out about everything. But hey, we're coming back a little bit from it, and I want to discuss kind of some of the reasoning behind what happened supposedly, and kind of a lot of the FUD that we've had to deal with throughout the week. There's just been so much going on, but I'm very glad to have you all here. Of course, smash that like button, give this a share. We're getting up 70 people in here watching live already, and we barely just begun. As always, this is live. Anything can happen. So, disclaimer from my good friend Bill.
We'll do it live.
Okay.
We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live. And thing sucks.
All right, let's go. As always, I am Ben with the BTC Sessions. This is your daily session.
Hodl the Bitcoin.
Okay, before we get into the news, of course, let's take a look at the markets where we are right now. So we are sitting at 40,650 some odd dollars for a single US dollar. You can pick up today 2,462 sats. Not bad. 89.12% of all Bitcoin have been mined. And next block, things are busy right now. 129 sats per byte. Even waiting an hour, you're still looking at 96 sats per byte. So, maybe wait till things chill out a little bit on the weekend. If you have any pressing stuff, then yeah, you're going to have to attach a higher fee. Now, zooming out on the weekly looks quite scary. Well, I guess not that scary. We were up near 50. That drop that we saw the lowest, it went down, and it's not even fully showing it on this chart. But we tapped 30K. We went sub 30K on a few exchanges, depending what you were looking at. It was pretty wild. If we zoom out on the 1 month, there we can see our kind of like previous all-time high. We did. No, not even. Man, that was a while ago. Okay, not that long ago. Mid-April, we got up to 64,500, and then our bottom, supposedly bottom, we were around 30K. So we more than 50%. We were more than cut in half with this dump. I hope you guys held on. I hope you guys are doing okay. But we're gonna chat a little bit more about that momentarily. Now, if you were in shitcoins, then that dump down to 30K would have looked a lot scarier if we were holding anything else. As Bitcoin started coming back, you still saw a lot of major altcoins down deep double digits. They have since rebounded a little bit, but again, you should probably be valuing your wealth in sats. Remember that a 50% sell-off takes a lot more upside to claw back as opposed to 20% or something like that. And alts do tend to dump quite a bit more. They do have more upside during bull markets because they're more illiquid. But if you're a long-term thinker, which most Bitcoiners are, you're not looking at that. You're looking at cycles, 4-year cycles and halving periods and everything like that. And if you're sitting in altcoins through a bear market, you get destroyed. I did do a video on this called Should I Buy Altcoins? It's part of my Avoiding Shitcoins 101 series of 3 videos. So be sure to check that out if you're unfamiliar with what I'm talking about. Before we hit the news, of course, shout out to sponsors of the show, Ledn.io, where you can use your Bitcoin for a variety of different services. Of course, the number one thing I tend to use them for is Bitcoin-backed loans. So if I'm in a pinch, I need to get my hands on dollars, but I don't want to sell my Bitcoin. Well, this could be an option for you. Selling Bitcoin, that's a taxable event. And of course, you might be worried about having to buy back in at a higher price. Well, here you can deposit Bitcoin, get dollars to your bank account, and when you pay back those dollars, you get back the same amount of Bitcoin, which is the important part. Of course, they do have their savings accounts, Bitcoin and USDC, up to 12.5% annually paid monthly. And their B2X offering uses the same loan mechanism to instantly buy you more Bitcoin. If you're feeling bullish, especially amongst a dip, who knows? Be sure to check them out. Links below. If you opt to get either of the loan products, they'll give you $25 for free into your savings. Of course, I do live on Bitcoin. One of the things that helps me do this is Bitrefill. They've got pretty much every damn gift card you can imagine, and in every damn country you can imagine. And I use this all the time. I have trouble not finding, or I have trouble not being able to find anything that I need. I can find everything that I need here. Of course, they accept Bitcoin on main chain and Lightning Network, and you do earn sats back as you shop. So check them out. And finally, if you're backing up any wallet, maybe get it in solid steel, because backing up your wallet, your seed phrase on paper, you're opening yourself up to fire damage, water damage, somebody accidentally throwing it out because they don't know what it is. I've heard some horror stories over the past year, especially as people kind of come back into the fray as prices tick up. So, do yourself a favor and get that peace of mind with the Bill Fodl over on Privacy Pros. And with that, let's dive into the news. So, this is probably one of the best threads that I've seen. Dylan over at Bitcoin Magazine. By the way, he's going to be on WOB tomorrow. Why are we bullish? He's going to be a panelist. He was here a few weeks back. I had to have him back. He's so good. But we're going to be touching a little bit on this and all the other FUD. But here's a thread from him. And he said, for anyone wondering what the fuck just happened, here's what I'm looking at. First off, bull market corrections of 25 to 30% are completely normal and expected. All it takes is a look at 2017 for multiple such instances. We had 4 separate greater than 30% drawdowns, some of them kind of closer to 40%. All 4 occasions, it was a fantastic time to buy Bitcoin for cheap. This one was even deeper than the ones we saw last year, more akin to 2013. In what was already somewhat of an overheated market with profit taking occurring throughout, throw in the Molotov cocktail that is Elon Musk, and things got really interesting as speculators without conviction started selling at a loss. Classic energy FUD. Now, the spent output profit loss ratio, mouthful, shows that UTXOs, or specific sets of Bitcoin, are being moved on average at a loss for the first time since September. So why did Bitcoin nuke? A pullback is understandable, but why 30K? What happened? Well, it's all about leverage. Following the 64K all-time high, the market started to sell off. During the sell-offs, funding flips negative, but each time traders quickly leveraged back up. Leverage was never flushed, but rather underwater longs kept adding to their positions as shown by the funding rate. So basically, people were betting that Bitcoin would go up, and they had money on the table for that. But every time their position started to require a margin call where they needed to add more to their position, they just kept on adding more Bitcoin to back it up. Well, they kept on backing up more and more and more to stay afloat, thinking that Bitcoin would not possibly go as low as it could. Well, opportunistic whales saw this and deposited to exchanges and began relentlessly selling, knowing the size of these underwater long positions. Elevated Bitcoin inflows to exchanges shortly before the major liquidations showed this developing. So you can see influx of Bitcoin transfers into exchanges as that happened. Whale selling at last got the leveraged traders liquidated as the wick down to 30K shows. Mission accomplished, longs liquidated, and they filled their bags in the process. Take a look at Bitcoin transfer volume from exchanges after the liquidations. So this shows people pulling Bitcoin off of the exchanges after all the liquidations. Basically, they made their money and they're like, yo, we're going to take our Bitcoin back off the exchange now that we've done what we came to do. Futures open interest fell from $27 billion at the 64K all-time high all the way down to $12 billion currently. The leverage got flushed. So if you're watching, you can see the open interest, the people betting on future Bitcoin prices basically got more than half of them got wiped out from all-time high all the way down below. Too long didn't read. This is nothing and should be treated as a huge buying opportunity. The macro landscape is unchanged. Shift your focus to what is actually taking place, the monetization process of a completely new, absolutely scarce digital bearer asset. Mic drop. Congrats, Dylan. That was a great summary. Thank you. Now, I do, as much as I'm not a huge fan of Raoul Pal, there's a couple cool charts that he did tweet out. He showed Bitcoin now versus 2013. Charts basically mirror each other exactly. Bitcoin now versus 2017. Again, charts basically mirroring each other. The dip effectively coming roughly at the same time in that kind of time frame. So yeah, absolutely. Is this anything out of the ordinary? Not particularly. Bitcoiners are used to that, almost expecting it. I mean, it is a gut check no matter what. If you say that you're totally calm through this, you know, everybody gets that little, oh, that was quite the dip. But hey, it's all in the context of where we previously were. Now that we're kind of sitting at 40K, everybody's like, well, hey, it's not 30 and we're on the way back up. So it's, you know, it's not as bad. Now, a lot of this can partially, or at least the spark that ignited all this can partially be contributed to Elon Musk as well. So he tweeted out on the 12th that Tesla has suspended vehicle purchases using Bitcoin. We are concerned about rapidly increasing use of fossil fuels for Bitcoin mining and transactions, especially coal, which has the worst emissions of any fuel. And then they go on to talk about they talk about energy per transaction. Tesla will not be selling any Bitcoin, and we intend to use it for transactions as soon as mining transitions to more sustainable energy. We are also looking at other cryptocurrencies that use less than 1% of Bitcoin's energy per transaction. And this is a total misnomer, but we'll get into it. So anyways, as he tweeted that out, everybody kind of got obviously salty because his takes were kind of bad on what he was going after here. After a lot of the blowback from his energy talk, he did tweet that Tesla has diamond hands through this pullback. You know, people weren't having it because he was a lot of the cause of it as well. Here's a picture of a guy standing outside SpaceX holding a sign that he printed off that said, "Elon, sell your Bitcoin and fuck off." I thought it was kind of funny. Also, he continued to tweet and kind of shit on Michael Saylor. So he made some snarky tweet about calling him Giga Chad, and then Michael Saylor tweeted back at him, after which Elon actually deleted the tweet. Anyways, Michael Saylor said, "Bitcoin is electric money. Real cars use electricity, use more electricity than toy cars." The article above, which Elon shared an article which was not very good, is full of logical errors and falsehoods. Bitcoin is the most efficient technology for converting energy into prosperity we have yet to devise. Then he tweeted at Michael Saylor, "It's not the bull market. You really are a genius," in meme form. And of course, lots of Bitcoiners just not having it, right? I tweeted back at him, "It's not the government subsidies. You really are a genius." But yeah, like Elon is making an incorrect assumption that number of transactions equates to the amount of energy used on the Bitcoin network. But that's not at all how it equates. The amount of Bitcoin, or the amount of energy used for the Bitcoin network, is kind of an aggregate cost to secure the entire network. And the number of transactions could be less or more regardless of what's going on. What you need to look at is how much value is being secured, and then how much energy expenditure does that merit in terms of cost of capital, so on and so forth. And beyond that, the energy usage per transaction, really, if you want to be comparative that way, you need to not just encapsulate base layer transactions, but every layer built on top of that. you got to think, okay, well, Lightning Network's on top of that. What can that facilitate? Well, basically unlimited. Whatever your bandwidth is, that's how many transactions you can get through. Millions of transactions per second settled on chain whenever a channel closes. It's a totally bunk metric to say percentage of or carbon output or amount of energy consumed per transaction, because a single transaction can represent millions of transactions being settled. So anyways, I don't know why I responded, but anyways, he was trying to calculate out, for some reason, Doge and its transactions per energy usage, and they were talking about kilowatt hours versus transactions, and he's starting to try and calculate out, hey, ideally Doge would use less than 1.1 kilowatt hour, and then calculate it as total energy used by the system divided by the max transaction rate. So he's still on this, like, how many transactions can we get for the least amount of energy? The energy is used to secure the network. And so if you use less energy, anybody at any point can come on with more energy than you are using. Like in this instance, 0.1 kilowatt hours. Somebody could come on with 0.2 kilowatt hours, have 66% of the entire network, and start messing with transactions and changing them around. It's, again, I can't say it enough. The metric doesn't make sense. Anyways, the market seems to be starting to ignore this FUD and come back around. I like this tweet from Mario Gibney. Last week, Elon sends some misguided tweets about Bitcoin's energy consumption, and the price absolutely tanks. Today, Elon tweets his concerns again. The price doesn't even flinch. Conclusion, Elon Musk has effectively vaccinated Bitcoin against energy FUD. Fair. Now, there was a really good report put out by Galaxy Digital, and they use a quantitative approach to a subjective question about Bitcoin's energy consumption, because a lot of times we don't question energy consumption for other things like televisions or transportation or hot tubs, things like that, Christmas lights. Nobody says, oh my God, the Christmas lights, we got to shut those off because it's using a lot of energy. Nobody really says that. It's subjective as to the value created for the energy usage that is going down. So I won't go into the details here, but I'll read from their conclusion. I've linked this in the show notes, but they say this report took a quantitative approach comparing Bitcoin's energy usage to that of other industries. In the interest of honest conversation, we also discussed why the value of Bitcoin is not just quantitative. Subjective views on Bitcoin's network importance vary, but Bitcoin's properties do not. Anyone can use Bitcoin. Anyone can hold Bitcoin for themselves, and Bitcoin transactions can provide probabilistically final settlement in an hour, 24 hours a day, 365 days per year. These features can offer financial freedom to people around the world without the luxury of a stable and accessible financial infrastructure. The network can benefit the energy sector by creating perfect use cases for intermittent and excess energy, solar, excess gas, all that kind of stuff they're referring to. And the network will only scale further if network adoption warrants it. Energy utilization is not necessarily a bad thing. Energy is the only universal currency. Humans will continue to find new technologies that require more energy that challenges the status quo. Bitcoin is yet another example. So if we return one last time to the original question, is Bitcoin networks electricity consumption an acceptable use of energy? Our answer is definitive yes. So in the report, they go through a lot of different things. They go through a lot of different scenarios. They talk about energy consumption on Bitcoin versus the banking system versus things like gold mining. They talk about the terawatt. They actually go into like terawatt hours per year for bank branches, bank ATMs, card networks, data centers, all of that. They compare it to the consumption versus Bitcoin's consumption. So very interesting. Now, another piece of FUD that kind of hit the rounds, I can't believe I'm saying this again for the umpteenth time, but China has banned Bitcoin. hot off the donkey. Newsflash: China has banned Bitcoin. I feel like I have a little bit of deja vu here. Anyways, this is the 8 millionth time China has banned Bitcoin in some way, shape, or form. I mean, it didn't really too much affect the market. There was a little bit of FUD around it for a little bit, but nobody cares. Nobody cares. Let's read a little bit here from the Financial Post. China has banned financial institutions and payment companies from providing services related to cryptocurrency transactions and warned investors against speculative crypto trading. Under the ban, such institutions, including banks and online payment channels, must not offer clients any service involving cryptocurrency, such as registration, trading, clearing, and settlement, 3 industry bodies said in a joint statement on Tuesday. So basically, there's part of their argument is they're talking about prices skyrocketing and plummeting, and speculative trading of cryptocurrencies has rebounded, seriously infringing on the safety of people's property and disrupting the normal economic and financial order. I mean, this is kind of what a free market looks like, right? When you have people trying to value an asset that many don't understand, there's going to be volatility. And until people widely understand it across the globe, there will continue to be volatility. And once people more or less do understand at least the value propositions of the system, things will stabilize at a market capitalization and a price per coin that makes sense for the value provided to humanity. This could take years. So don't be surprised when you're monetizing a new base layer of value, a digital base layer of value for all of humanity, that there's some ups and downs in between. And I mean, again, China has banned Bitcoin so many times. This is such a nothing burger, but I had to bring it up because it's all over the news. And then this little piece that was also fun. Like, all of this comes all at once. But from the Treasury, and this is from Bloomberg, Treasury calls for crypto transfers over $10,000 reported to IRS. And this is like a big, bold headline. IRS is what did they say? They're trying to crack down on this, like as if it's something new. So here's what it says. As with cash transactions, businesses that receive crypto assets with a fair market value of more than $10,000 would also be reported on the Treasury Department, would also be reported on in taxes. This is the Treasury Department said this in a report on tax enforcement proposals released Thursday. So let me make this clear to you. If your business receiving more than $10,000 in dollars, in another currency, in barter goods, or in Bitcoin, all of it across the board falls above the threshold of anti-money laundering, where you need to take some extra steps and get like proof of source of funds and things like that. This has literally not changed. This was already the rule. If you're doing transactions in the US over the $10,000 threshold, it requires additional steps to ensure anti-money laundering. So I don't know what the story is here, because it's not like this changed. It sounds like they're just saying, yo, this still applies within our jurisdiction. Again, such a nothing burger. They're not talking about on-chain transfers, because that is literally impossible to enforce. What they're talking about is if you sell or if you purchase goods with $10,000 equivalent of Bitcoin or more, then there's some due diligence that needs to be done on the part of the business accepting that. So I don't know what to tell you. This is just absolutely nothing. MicroStrategy seems not to give a shit about all the FUD, because they just stacked an additional $10 million in Bitcoin at an average price of $43,663. I'm sure they're continuing to stack, but this was just recently. Mid-dip, it would seem. Not bad. Like, they really don't care. Michael Saylor tweeted out, I'm not selling. Yeah, Bitcoiners have been around the block, kind of know it doesn't really matter. Again, there's plenty to be bullish on here. NYDIG, again, the whole banking thing that they're working on, they proclaim that 2021 will see hundreds of US banks offer Bitcoin. So they've kind of been adding to this story that they released recently, but effectively, through a partnership with Fidelity, NYDIG has launched a program to enable hundreds of banks across the United States to begin offering Bitcoin services directly in customer accounts. So this is like the antithesis of what China is doing. China is saying no financial institutions can offer anything to do with anything cryptocurrency related. Whereas in the US, they're saying, hey, we need to get everybody to be able to have Bitcoin accounts if they want it. We need to give people access to this. This is where I think China fucks up. They're trying to clamp down and keep everything in a walled garden with a borderless, censorship-resistant network. I know that the internet is a little bit easier to control. It's kind of hard to fuck with Bitcoin, I've got to say. You know, the firewalls involved in trying to stop that, especially when you actually do not need an internet connection where you can do it via satellite. Hell, you can do it via shortwave radio blast, as proven by Rodolfo from CoinKite, the guy who makes the cold card. He literally did a shortwave radio blast through a snowstorm to somebody in the US from Canada and transacted on the Bitcoin network that way. So gonna be a little hard to clamp down on Bitcoin transactions in China. And I'm glad to see that the US is taking the opposite approach. Not to mention, in terms of bullish things happening in Bitcoin, Taproot is looking like it's going to be activated, not the current signaling period, but soon. So Taproot, an improvement to Bitcoin that will basically cut down on the amount of bloat on the Bitcoin blockchain, making it more efficient. Effectively, in instances where you need multiple signatures in order to sign a transaction, things like multi-sig or things like CoinJoin, it will be able to aggregate that into a single signature, which is the bulkiest part of a Bitcoin transaction. It also helps with the functionality of smart contracts on Bitcoin, so on and so forth. All around a great thing to be activated. Anyways, this now looks like it's going to be locked in. The website taproot.watch lets you kind of watch this. Every green block means a miner is signaling that they are ready for Taproot activation. We need a total of 90% plus of all blocks mined in a 2-week period in order to lock this in. At current count, around 95.5% of total hashing power is signaling that they are ready. Basically, everybody except for a few small pools out there, the biggest of which has 1.6%, the rest of them sub 1% of the hash rate. And yeah, so effectively what will happen is after this mining period is finished, which we still have, we're about not even quite halfway through this signaling period, but in just over a week from now, we'll start a new signaling period. And assuming that all of the mining pools that are signaling support for Taproot are still signaling by then to the tune of 90+%, then that will lock it in. So probably in about 3.5 weeks time, we should have a lock-in is what it looks like. And if that is true, or at any period from now over the next 3 months, then it will lock in and will activate in November. So very exciting. This is so similar to 2017 because back then we were trying to activate SegWit, which enables basically a roundabout way to get more transactions per second. It also enabled some of the fixes needed in order to enable Lightning Network, which is now, of course, running and active and able to be used by everybody, which was huge. So I'm very excited to see this lock in. And this is the signal through the noise here. Things are moving forward. Things are going well. Now, I did have a friend of mine reach out. I apologize, Mike. I didn't get back to you. But he was asking about signaling how this works and how this is not going to screw things up and in terms of why the miners are deciding so on and so forth. There was a lot of debate about how to activate Taproot, particularly because back in 2017, activating SegWit became a very contentious issue. Some miners tried to fuck around and exert power over the network and try to, I guess, bribe their way into not getting it activated. There's a lot of nuance to this. One of the major miners at the time, Bitmain, actually had a little bit of an exploit where they could mine much more efficiently than everybody else, and SegWit kind of broke that unfair advantage for them. And so they didn't want to activate it, and so they refused to signal for it. Well, they fucked around and found out because people went forward and said, hey, we're just going to ignore what you do. We're going to do a user activated soft fork, which means users upgrading their nodes and essentially forcing a change, which could eventually really screw with everything that Bitmain did if it took hold, and they backed down. This was a little bit different. This time around, the way it works is, again, you need 90% of miners to signal that they're ready for this over a 2-week period. It used to be 95% when we were doing SegWit. And this one is a much shorter time period. So there's a 3-month signaling period. So everybody had to get on board quickly. Now, there was some contention even around this signaling method. But if we look back again previously, miners, as we've learned, do not control the network. They are providing a service to those of us that use Bitcoin, run our own Bitcoin nodes, and are asking for them to mine Bitcoin blocks and add blocks of transactions to the Bitcoin blockchain. If they can't execute that function, then they can fuck right off if you're running a node. And if they mine something that is out of consensus with everybody else, then they will have spent time, energy, and capital mining something that nobody wants, and nobody will accept the not Bitcoin that they've just mined. So effectively, this is a backwards compatible fork. It is a soft fork, meaning that if it locks in and it's an upgrade to Bitcoin, you have the option to not upgrade. Everybody will still be compatible with each other. Anybody who's using Taproot can still communicate and utilize the Bitcoin network just the same as somebody who's not using Taproot. Okay. A hard fork is when it is not backwards compatible, which would mean that unless everybody changed and upgraded their software at the exact same time, you run the risk of splitting off into different networks. This is not the case with Taproot. Okay. So again, I'm not explaining this as best as I could. There's a lot more to it, but hopefully that answers some of the questions. Mike, I don't know if that answered your question, but if not, hit me up. Let's chat later. A few other cool things coming up. This is tomorrow, Lightning for Beginners. Tomorrow, May 21st. It'll be done happening at 10 a.m. Pacific time, 3 p.m. Eastern, I think. I'm pretty sure. I hope so. Anyways, I'm a part of this. So I'm going to be speaking. I did recently do my video on how to run a Bitcoin Lightning Network node with your Umbrel, or with my node, or whatever interface you're using. So if you want to dive into that topic, you feel free to go back and check that out. I also dropped this Monday how to connect your Blue Wallet to your Umbrel Lightning node and use your node's liquidity to trustlessly use Lightning Network on the go. So you can go back and check that out. Hopefully I'll get to touch on both of those things at this Lightning for Beginners online conference. So be sure to check that out tomorrow if you're around. Very excited. Lots of people. Renee Pickard, Alex Bosworth, sorry, dude. Stefan Lavera is going to be there. I'll be there. Lightning Network junkies. Yeah, very excited. Lots of fun people there. Be sure to check it out. I guess that's it, guys. I think I'm going to cap it off there. This one felt rambly to me. I don't know. There's just a lot to cover, and I feel like it's kind of tough to get it all in. But hey, thank you so much for watching and or listening. As always, like, subscribe, share, all of those things really, really help. If you're watching on YouTube here, please do it. You can get more eyeballs on the show, and it helps out a ton. If you want to help out the show in another way, you can hit up the sponsors I mentioned previously down below, Leaden, Bitrefill, and Bill Fodl over at Privacy Pros, all linked in the show notes. And if you really loved what you saw, you can drop me a Lightning Network tip at my tippin.me page. That is tippin.me/@BTC sessions. With that, I'm out. Have yourselves a wonderful day or evening, wherever you may be. See you guys next time for your daily session.